Good morning. As we have people start to join and get in here, I want to introduce myself. We'll go ahead and get started this morning. My name is Justin Ford. I work as a sales director for the life insurance team at IAMS, and I'm going to be working here today with Securian, and we'll be transitioning the presentation over momentarily here to talk about this great scope of long-term care, as well as the wonderful solutions from Securian as well. Before we get started, we typically have a mix of some of you in the audience may be new to IAMS, may have just joined, or have been with IAMS for a long time. And with that being said, I want to cover some items here that will be beneficial for all of us and hit each one of those audiences as we go forward. Before we get started this morning here. So the first of which is, if you are new to IAMS or you just recently joined, there are some incentives that we have here to help jumpstart your launch with us. First of all, thank you for joining. If that is the case, if you're looking forward to or looking into us and joining, definitely make sure you have a conversation with your primary contact here at IAMS, or if you're within your first 180 days with us. We do have incentives to help jumpstart your production, get those first cases in with us, and at the same time compensate you at the same level to help cover some of the very marketing activities that get you in front of the people that you're going to be submitting cases with us for. Talk to your primary contact at IAMS. We have customizable plans, jumpstart programs that start with everything from postcard mailings, individual cash, all the way up through marketing analysis and very individual marketing campaigns that can be started just for submitting those first couple cases with us, in addition to the compensation that you would earn directly from the carrier. So exciting stuff here. Just have a conversation with your primary contact, whether that be on the annuity or life team, and ask them about the new Producer Builders program. And we can get you registered for that and also get you the different information out. And rather than just reading a slide here, we want to make this customizable for you. Whatever's working best in your practice or whatever you feel your need is, we want to make sure that we're taking care of that for those new cases, and we can get you started as fast as possible with us. In addition to that, you may be coming over to us or maybe with IAMS for a while, and you may have time to time run into another producer who hears your excitement in working with us, and you feel that they would be a great candidate to join the team here at IAMS. We're going to compensate you for that as well. We have a referred producer program, our business builders, part of our business builders critique here. And the way that this works is you're going to get paid, the individual that you're going to refer is going to get paid with us. You're going to get paid a one-time bonus every time that you refer an agent contracts with us. That's a $50 bonus. And $100 you'll receive when they write their first piece of business with us. In addition to that, sky's the limit, because for the life of that production, life of that advisor with us, we're going to compensate you out of our pocket on the production that they write with IAMS. They are not going to be subject to any type of haircut. They're going to earn their business. They're going to refer people as well, and you're going to get paid on those individuals that you do refer over. Over the years, we appreciate it. We, much like your practice, we've built ours very much on referrals. Many of you on the phone, I want to thank that may have been with us for decades. We're just joining, and this is a great part of it, because the wisdom of the crowd, the more opportunities we have to work with people like you, it allows us to grow, and it allows us to create resources and have great partnerships and education material like we're talking about here today with long-term care. Make sure you talk to your primary contact at IAMS. We'll get you the material, get you the specs on the program, and get the individual taken care of. We'll handle all the licensing, reach out to the referral, or do an introduction with you and make sure they're taken care of to their specific needs. Back office support. So once you do write those cases, or your referee writes a case and comes through, one of the keynotes and one of the long-standing benefits and a point of pride here with IAMS, according to our advisors telling us, is our back office support. Hands down, service and support, where would we be without it? We have an entire team here, both on the annuity and the life insurance side of the house. I don't know what I would do here. We're not working with the great people that we do on the life insurance and long-term care team and the annuity. when you do submit a case, you're going to have multiple people paying attention to that case and making sure that you get paid as fast as possible, deal with the carrier less, and have the ability to go about your business and work with individual clients so that you can get right back in there and write another case. If you have any questions whatsoever, please give a call to your primary contact, and we can introduce you to your case designers as well. Paperless contracting is another thing I'd mentioned on the last slide here. When you do license, everything seems to be digital nowadays, and it's not just because of COVID. The insurance industry is catching up, and IAMS has been on the forefront of digital marketing. Many of you are here because of that. And one of the things that we're interested in is making sure that each one of you get paid, your clients get placed, and get their needs taken care of, because that reflects directly on your image as well. So we have several platforms. When it comes to licensing, many of you may have already experienced this if you're just joining with us. Licensing is at the click of a button. Once you fill out some general information with IAMS, we have that information set forward on our third-party licensing platform. And going forward to write a new case, even in another state, is as simple as clicking and approving a link so that we can get that stuff taken care of without having to use the fax machine. And yes, I said fax. I'm dating myself here, but for those of you that are younger on the phone here. Firelight, we have two methods of submitting applications through digital platforms. So paper applications are starting to go away. The carriers are starting to move away from those. And the benefit of using some of these once started programs that may have had some bumps in the road, now that they've smoothed everything out, the benefit is immense. The amount of not in good order or NIGOs that you receive are completely eliminated. Firelight is our annuity platform that we use. You can access it directly via IAMS website. Again, talk to your key contact or give me a call if you have any questions. Once you register on our site, you'd be able to take an e-application after you contact your point of contact here, and we get you registered for Firelight. So if you have an interest in registering for Firelight and getting paid faster and having 99% air-proof applications for annuities, please talk to your primary contact here at IAMS. And as we see the numbers increase, this is having a positive impact on our business, which goes back towards our ability to put more out there for you back into your practice rather than spending it on paper and things of that nature. In addition to that, carriers are coming on every day. As a matter of fact, this is already, it seems like you put a PowerPoint slide together and it's already got additional carriers that we need to add on. So the vast number of carriers that are available on Firelight continue to grow. When it comes to life insurance, we use a platform called IGO. And you'll notice that right in the same drop down on our website, right next to the Firelight for taking life insurance applications, and the same things apply. Reduce not in good order applications, faster to the carrier, faster to the client getting their Part B or their accelerated underwriting email, and all the way through issue. Creative marketing solutions. So how can we make sure that we let our communities know how well and how important you are to that community? I've been working in this industry for 18 years, been very blessed to work with leaders like yourself, great mentors, independent business people, sharp minds and caring minds that help individuals plan for retirement, offset the risks, take care of their family in the area of, as an example, long-term care and that growing concern, reduce taxes, etc. But I oftentimes find that we're working with those clients individually and the community doesn't know how good you are. So how do we get the word out? IAMS has put together a creative marketing team here in-house, individuals that are working for you in a complete advertising and promotional agency, as well as leaders in digital solutions, which is kind of unique in the IMO marketplace. Everything from personal websites all the way through email marketing and very specific social media consulting and email campaigns. So geofencing as well, the ability to create a digital fence around, as an example, a company. If there was happen to be a layoff, to where everybody in that geographic area or that fence that is created, you can make sure that your name is actually on their phone, on their Facebook, anywhere near that area, so we can get really specific and target. What's unique about this team, again, is they do work for you. They are on our payroll, just like I am, here to serve you. They do not work in an advertising agency to where you're going out and paying for someone who also does, for instance, expertise in cars and furniture. The rights of the material in many cases that you put together here are also yours. That's in your hands. And that's another key point here that's very important, because a lot of advertising agencies, when they create material, those of you in the room that may have gone this route, not only do you pay through the roof on it, and oftentimes pay to have them understand the unique intricacies when it comes to financial services, but they also keep that material. And the challenge with that is when they move on to the next financial advisor, say at a XYZ captive company, they can recreate that material with that individual too. So you own your material here. Talk to your individual contact at IAMS if you have interest in getting your name out in the community, and we'd be happy to help. Our website. So everybody's got a website. A billboard nowadays, you kind of have to have one in a sense, because a lot of times people trust the website and they lean on it for better understanding of who you are as a company. We have all that. It's kind of like table stakes. We've got information on our company on the website. But in addition to that, we wanted to make our website, and we have an excellent resource for tools. We have the e-applications you can take right there. You can contract. So essentially, you can meet a client using very specific point of sale material that you can download from our website, tools to help them better understand, maybe an educational brochure to help them better understand the ins and outs of long-term care as an example, which, by the way, if you have an interest in the long-term care sales kit, point of sales kit that's not on the website, please do talk to your life insurance contact today. They'll be reaching out to you as well throughout the week. We can get that over to you as well. But essentially use the point of sale material right off our website, quote anything that you need there as it relates to, as an example, term insurance, get annuity rates, see the long-term care insurance grid, all the way through taking the application. First contracting right from our website, then taking the application right from our website, and it doesn't sleep. So as much as we'd like to speak with you on a regular basis, I know sometimes we're hand-on and we want to go out there and run our own illustrations, enter our own e-applications. And sometimes you may be in the middle of the night or on a Saturday and we're not here during business hours to be able to assist. You can access many of the resources that we talk about right on our website. So if you haven't registered for IAMSinc.com, it's a simple process. Reach out to your primary contact today at IAMS, whether that be annuity, life, and we can get you all set up. When it comes back to presentation materials, I mentioned point of sale material. One of the things that is becoming, one of the concepts is becoming growingly more important is software. And before I stop, let me stop there before I go into it. Not software like Excel, where we've got to spend hours learning this software. The software itself creates outputs, and the output itself is helping a client better understand and get over themselves in many cases. So you've got a concept, you're helping them educate, they know they have risk, but a simple illustration or a conversation is just not going to help them get over it. Many people are both hands-on, visual, and auditory learners. So we've leaned on some of the industry's best presentation systems and case detail, income planning software, long-term care planning software, tax risk reduction software when it comes to overfunding IULs. One of the leaders in the industry when it comes to retirement income planning and taking a look at that plan that you believe to be true in your head, your individual retirement plan, and being able to see if things stand the way they are, will it work out or not? And if it's not going to work out, what year? And if it is going to work out, for how long? Which many people would like to know that answer. Obviously, they're coming to you today versus in the future when it doesn't work out, because you've got time to recover. Retirement Analyzer does a great job with this. I personally use this to uncover income cases, work with advisors in a retail situation here, and help better put together and understand the risks within a retirement income plan, as well as entering or going in and showing the solutions when it comes to annuities, life, and even long-term care insurance back in the plan. So if you have a question about Retirement Analyzer, reach out to your primary contact today if you're not already using it. In addition to that, Retirement Analyzer, we also on the life insurance side, with the recent tax changes as it relates to the changes in 7702 and the IRS making those changes in January, at the same time with an increasing spending, account here in our government, we've got a future tax liability coming up for retirees, a major tax bomb that could be a challenge for many that they may have not accounted for. So we know that as we continue to go forward and spend as a country, and we're not necessarily bringing in the revenue, we know that some of those rates they've already said are going to go up. So we work with a company called Stonewood, which is another presentation software that's helping our advisors uncover larger target premium cases, help clients understand the benefits of funding one of the two approved ways for the IRS allows for tax-free retirement income next to a Roth, of course, over funding cash value and life insurance. And this presentation breaks it down into an understandable concept that allows them to see the pros and cons. Funding your retirement in a tax beneficial pre-retirement account, or funding a retirement account now using cash value of life insurance and having tax-free income in the future. That can tie right back into the retirement analyzer as well when you're doing your planning. But I urge you, if you have interest or if you've got clients talking with you about that concern of taxation, please give us a call and ask the life insurance team. We'd be happy to speak with you. Myself, Tony, Jess Riley, and Curtis Ox. So now that we've talked about the different product channels and funnels, if you will, and sleeves, what are we doing about a client's overall picture? We've been taking a lot of questions here of individuals that are wanting to get their Series 65. If you're looking at getting your Series 65 to either be able to look at a complete wealth picture with the client, give us a call. IAMS Wealth Management, a little unique here in the brokerage world. Excellent resources, help you from taking your exam all the way through placement and get you set up here with IAMS Wealth Management. If you already have your 65, or maybe you're stepping away from being the compliance challenges with being a registered investment advisor and you want to become a IAR, give us a call as well. Myself, be able to help you here, Justin Ford, as well as Duncan, and any of your primary contacts can get you over to the wealth management team. Increase your revenue, pick up more, leave less on the table. At the same time, help a client truly look at their overall picture and be able to help them full circle. Appreciate your business. One of the things that I'm excited to announce here is we are in the middle of trip qualification here. So we do have an incentive trip, IAMS does. This year we're going to, the next year we're going to Rome and Sorrento, Capri, beautiful island. And a little unique thing with, we're in the middle of the qualification period now. I believe we're getting numbers sent out if they haven't already hit. But IAMS a little unique. We do a 12-month qualification, or an 18-month qualification period versus a 12-month, which a lot of groups do. So for those of you that are joining us, there is some extra time here to get in. The qualification period here is listed below. If you have any questions about this or you'd like to attend, please join everybody else that's been asking. Talk to your primary contact at IAMS. Make sure they're aware that you're wanting to go there so we can put that extra support right back to you to help rally you to the event. Look forward to seeing you there. Things are opening up. So it's 2021, sadly enough, almost 2022. We have brought back our training, our Life and Annuity Academy. It's 2-day producer training, rubbing elbows with other producers, sharing ideas with like minds from across the country, sales ideas and very specific strategies from 4 of those top producers at the event, breaking down the complexity and the individual points within an indexed annuity as an example, as well as some threats politically and trends that we're seeing in the annuity industry, cutting edge stuff, folks. In addition to that, we're going to be talking about life insurance, what's going on with the effect as the dust settles after 7702, who's going to become the leader, who's pushing out there. In addition to that, what's the future of these tax changes? What does it really mean? What does it mean actuarially? A lot of benefits to this group. And if you're wanting to get a first-hand look at the software tools and the different point of sales material in a room with 4 producers and other producers that are currently using it, some of which are also looking at the same time, give us a call. We want to get, we've got dates and locations. We're going to be coming up with many more. We've got one coming up in November. talk with your primary contact here at IAMS to make sure, if you haven't already, get on that list of registration, and we can go forward from there and see if we can accommodate more of these academies going forward. So at this point, I am going to switch over to our primary presenter here, and we'll get started with the show today. I appreciate your time.
Hello, Justin and IAMS partners. Thank
Hey,
you.
John.
Yes, thank you for having me on. I appreciate it. And good morning, everyone. Thrilled to be with you. I'm John Thomas with Securian Financial, and going to talk a little bit about SecureCare and the long-term care insurance market and long-term care insurance opportunity. But as Justin was sharing, I really think that long-term care insurance, we talk about it in insurance planning as a separate aspect of financial planning, but it really is retirement planning, right? We're really all in the business of protection and retirement planning. And long-term care or elder care is really an extension of the retirement plan, right? I like to think of it as phase 1 and phase 2 of retirement planning, right? That we save and we invest and we have our 401k and our IRAs and everything to position us to have a great retirement years, right? To golf and travel and enjoy our families. But then at some point we all slow down, right? If we live long enough, we're going to slow down, we're going to age, and we're going to need additional income to meet care needs, right? Whether it's through family, whether it's through assistance, qualified long-term care services, what have you, there is additional income needed later in life, and that's that phase 2 of retirement, right? And so how do we also appropriately plan for that later half of life and not just the first half of retirement? Right, and so that's really the big picture of long-term care insurance planning. And for those of you that are very familiar with long-term care insurance, I hope you glean some from this presentation and the opportunity. And for those of you not as familiar, we'll talk about long-term care insurance and really what it is and what the opportunity is. But again, I'm John Thomas. I've been with Securian Financial as a regional VP supporting our Midwest sales. I've been with the company for about 2 years. Before that, I spent a decade with Nationwide Insurance, really in this life insurance and long-term care planning space. And so I've had some experience in the market. I've become passionate about really having this elder care a conversation, but really the opportunity for us as agents and financial advisors and planners, the opportunity as this market is growing substantially. Right, we know that these baby boomers are heading into retirement. The care need is bigger than it ever has been, and so there's substantial opportunity to really help folks transition well into their retirement or golden years, as we say, right? But a little bit about Securian Financial. If you're not familiar with Securian, we are the 8th largest insurance company in the nation. We've been around for 140 plus years, and Securian Financial is the umbrella company for Minnesota Life Insurance Company. You've probably heard Minnesota Life. That is really the brand that we've been under for the past 140 years. A couple of years ago, the company said, Minnesota Life sounds kind of like a smaller boutique life insurance company, and we're much bigger than that. And so they decided to rebrand under Securian Financial that has more of a global sound to it. But we are one and the same. And Minnesota Life or Securian Financial is a mutually held company, and as a mutual company, we are not publicly owned. And so that really gives us an opportunity to invest long-term, conservatively, and have successful results. And because of that, we've had extremely fantastic ratings from the rating agencies. We've got a Comdex score of 96 out of 100, which really puts us in that top tier of insurance companies. And I mention it because you're considering potentially the solution that Securian offers, and as you write a Securian policy, it is a insurance policy, so it is a promise. to deliver in the future. And you want to know that Securian is going to be around to deliver on these promises, which based on our track record, we have a strong history and strong ratings over the 140 years we've been around. So that, I think, really can help give you the confidence as you present a Securian solution. But as I mentioned, we'll talk a little bit about the need. You know, COVID-19, absolutely something we'll address as it's added to concern in the market, individuals' concern, and the opportunity we have to have this conversation right now with our clients. Right, changes in caregiving, public long-term care options on the horizon, and trends in our solution, SecureCare. But as I mentioned, you know, we often have this conversation about retirement. You know, what are our financial goals, personal goals, right? But we're not having this conversation in many situations about that latter half of life, phase 2 of retirement or elder care. You know, our goal as we're planning for retirement, we're creating income, and we have income goals for retirement. These income goals assume that we live a long life, right? And aside from you know, illness and sudden death, many people live a long, full life and get to a point where they do need care. And so how do we plan for the extra income needed as we need some assistance or care later in life? Health risks increase as we age. I think we all know this intuitively. One of the biggest risks are cognitive impairment. Alzheimer's and dementia are increasing substantially. You see here on the slide, more than 5 million Americans are living with Alzheimer's. The Alzheimer's diagnosis rate increased by 70% over the last decade. It's anticipated that it will continue to increase, and so cognitive impairment is a risk that you know, increases and that we need to plan for. Now, what is long-term care? What do we mean by long-term care, right? Really, as we define it, or as the IRS defines it, and the IRS defines what qualified long-term care services are, and insurance products correspondingly, they qualify it as the need for assistance with activities of daily living. You've probably heard this, you know, things like being able to feed yourself, bathe yourself, use the restroom by yourself, getting in and out of bed, dress yourself, or continence, right? If you need assistance with, as the IRS says, 2 out of these 6 listed activities of daily living, then you qualify as being chronically ill or in need of assistance for long-term care. In addition to those activities of daily living, cognitive impairment, having an Alzheimer's diagnosis or dementia diagnosis, also puts you in that category of having a chronic illness and qualifying for long-term care services, right? Now, how do you pay for future care? You know, as we have a conversation, and really consumers or individuals and clients in society, we think of many ways, right, that this will happen. You know, folks think that they'll just fund the additional costs, whether it's medical costs or care costs, out of pocket, right? Out of their savings, out of their retirement assets, what they have set aside. They will self-insure, or they'll pay for it as they go, as the needs arise. Many of us, you know, really don't believe that it's going to happen to us. We live, you know, we think we'll stay mobile well into life, that we're not going to need care, we're not going to pay for care. But the reality and the data doesn't support that, right? That there's a significant risk for care and the cost of care if you live long enough. Family is a big part of it, right? 2/3 of care is provided by family members, and so that is certainly a reality that our family steps in, and they're the first line of defense for providing care. As a matter of fact, care is often progressive, right? It starts at home, it starts with family, and as our health deteriorates, we transition or often move into a more formal ways of assistance, like assisted living or nursing homes, right? As we age and as family has a harder time keeping up with our health needs. Government or insurance, right? There's often this belief that the government's going to step in and help with some of those costs, medical costs and long-term care costs later in life, right? I'm moving through some of these slides here, but really the 2 government programs we think of are Medicare and Medicaid, right? That Medicare will chip in and help with our long-term care costs. That really isn't the case. Even though we believe Medicare is available for long-term care costs, it isn't. Medicare offers really short-term benefits for short-term care geared towards rehabilitation. So you often hear that they offer coverage while you go to the hospital, you're recovering. There is coverage through Medicare. That's true, but there's full coverage for up to 20 days, and that is coverage geared towards rehabilitation. That coverage can extend to up to 100 days. After 20 days, there's a copay that's required from that individual, but after 20 days, the amount of folks that get any Medicare benefits is low, right? But even beyond that, up to 100 days is the most that you can get out of Medicare, and that's geared towards rehabilitation. If you're deemed chronically ill and you need long-term care services or assistance, then Medicare does not have benefits to cover. Medicaid, of course, is for folks that don't have assets to pay for themselves, right? And so Medicare often pays when folks have used up all their personal assets and they transition into a facility that offers a Medicaid bed or Medicaid or state services. And Medicaid is improving some, but often a Medicaid paid long-term care situation is not one that many people want to end up in. That's not the ideal situation. So how do we, plan now, reposition the assets that we have now to put ourselves in a better position as we age, right? And there are insurance solutions that have developed traditional long-term care as well as hybrid. Traditional long-term care insurance has been around for 60, 70 years. And it's like other insurance, right? Like homeowners or auto insurance, you have a monthly premium, you pay that premium, and there's a stated benefit, right? When you need care, there's a benefit. But that insurance, it has some drawbacks. It's not guaranteed, right? The premium can increase and has increased over time. As insurers kind of underestimated the cost of medical costs, the cost of care as it's increased, and made some poor assumptions quite some time ago, premiums for long-term care insurance have increased dramatically, right? In addition to that, if you are one of the folks that do live a long, full life and you pass away and you don't end up needing care, then you don't get a benefit from most traditional long-term care policies. And so that created kind of some space in the market for hybrid or life insurance, or excuse me, long-term care insurance policies based on a life insurance chassis. And so that gives us the opportunity to use life insurance to guarantee benefits to a degree. So premiums are often guaranteed with these solutions. Long-term care benefits are fully guaranteed, and a death benefit. Because it's built on a life insurance chassis, it introduces a death benefit that says, no matter what happens, even if you pass away and don't need long-term care, there's a death benefit. And so that investment is going to yield some return regardless of the outcome. Now that's kind of a just quick on long-term care, but as we've been in this COVID situation for quite some time, and as Justin said, coming out of it, folks are really starting to think hard about reimagining their life in care. Particularly folks that are in their 60s and entering their 70s, and have had loved ones in nursing homes. I had 2 family members in nursing homes that passed this past year during COVID. And so COVID really swept through, and we saw this in nursing homes. That was a dramatic effect on nursing homes, right? And so for anyone that had the opportunity to get out of a nursing home, whether, family, they could go live with family, or they could come up with some other arrangement, there was this dramatic decrease in nursing home occupancy from 80% in early 2020 to now about just shy of 70%. So folks were getting out of nursing homes if they could. Of course, we lost significant loved ones in nursing homes over that period of time. But for those of us that have had this experience and been impacted by loved ones in nursing homes, we're thinking differently about planning, right? In a funeral I was in this past year with a family member, many of the older family were talking about, the nursing home and what happened and how can I stay out of a nursing home, right? That's not where I want to end up. And so planning needs to take place. If there's no plan in place, often when family isn't able to provide care anymore, this is where we end up, right? And then in addition to that, COVID's effect on the body, right? We know that scientists are just beginning to do a lot of these studies, but the Mayo Clinic has some fantastic research on the virus itself, and that it lives in the heart, in the lungs, in the brain, and that it's causing long-term damage. You know, there are imaging tests showing damage in the heart and damage in the lungs, even sometimes in mild cases, right? And for those of us, the many millions of us that have had contracted COVID-19, right, that there are potentially long-term care effects we're not even aware of that might increase chronic illness down the road. And so reasons from a personal health standpoint to have a conversation about, you know, chronic illness and what chronic illness will do to us as we age. Now, the ARP puts together this fantastic study every couple of years, and this study they put together in 2020 looks at caregiving in the United States. It does all kind of research on caregiving in the United States, but one of the things that came out of this study is that chronic illness, even prior to COVID, and this is increasing dramatically with COVID, but even prior to COVID, chronic illness and the longevity of chronic illness is increasing. That there are more and more folks that are getting diagnosed with chronic illnesses, but medicine has extended our life, right? And so we have more and more folks living longer with chronic illness. And so prior to 2020, in their 2015 study, they estimated the average caregiving need at about 4 years. And then from the period of 2015 to 2020, there was a 30% increase in folks that received or needed care for longer than 5 years. So you see that in these final two rows here, the 15% increase in folks that needed care for longer than 5 years, from 5 to 9, and 14% in folks that needed care for longer than 10 years, for a total of 30% increase in folks that needed care for more than 5 years. And so that adjusted the average from what was 4 years in 2015 to 4.5 years in 2020, right? That there's about a 4.5 year average on individuals and how long they need care. This study also looked at planning, right? And one of the questions you see on this table to the right, one of the questions, do you have plans for your own future care, such as handling financial matters, healthcare decisions, or living arrangements? And they asked this question of folks that were receiving care and their caregivers. And so for folks that were care recipients or receiving care, prior to ending up in a care situation, almost 40% of them, you see that right here in the middle, almost 40% of them did not have a plan for future care. And so 40% of folks didn't think they were going to need care. They thought they were healthy, and then all of a sudden they end up in a scenario where they need care, right? And that often shifts the priority or the responsibility of that individual to family members. So often these caregivers are family members, and for those family members or caregivers, 54% of them didn't have the conversation with their parents or their loved ones or other extended family, right? And 54% of them ended up being a caregiver and had not had this conversation or didn't have future plans for the person they're taking care of. And so there's a huge need for us, as we're helping folks plan and helping them have this retirement plan conversation and planning, to include long-term care, right? Whatever the solution is, we need to include it as part of the conversation, so that whatever the plan, the family has talked about it and has some plan in place, right? And we know, you know, the risk, aging baby boomers, what they're calling the silver tsunami, right? All the baby boomers that are going to be entering this later stage of life. This increased awareness of demand is actually going to create caregiver shortages. They're calling for an enormous caregiver shortage in the coming years. And so what is that? How is that going to affect us? Well, you know, the government certainly aware of it. The public programs like Medicaid are severely affected by folks that haven't prepared and end up on Medicaid. They use up all their assets and need care, right? And so Medicaid has been severely affected. Washington State, if you're not familiar with this, in the past year has passed the first public long-term care insurance program, really in response to this coming wave and what we see as this increased challenge down the road. And so Washington State passed what they call the Long-Term Care Trust Act, which is a mandatory payroll tax beginning next year on employees. You see it here, 0.58% on employees. It's mandatory. There's no cap for every earner in Washington, right? And that's going to fund a long-term care benefit for residents of Washington. The benefits will begin at $36,000 or $36,500 for those that need assistance. It's not an enormous benefit. It really is. Washington was looking at this as an opportunity to shift some of the costs, to create a new tax program, to shift some of the costs from Medicaid to this new trust and taxes that are accumulated. And so they're most certainly, for many folks, is a better way to plan than this new program that's been instituted. And you know, if you're not convinced of the opportunity, one of the other studies here from it's called the Insurance Barometer study from LIMRA and Life Happens. Life Happens is the nonprofit life insurance organization that studies life insurance and long-term care. In their 2020 study, they looked at the long-term care need gap and identified that out of the folks that don't have long-term care insurance, 43% of those identified said that they have a need, a self-expressed need for long-term care insurance, right? That they want to have this conversation. They realize they have a need. So out of the folks that don't have it, 43% said, yeah, I need it. I need to talk about it, right? And this need gap equates to what they estimate is about 110 million consumers. And so 110 million consumers have expressed a need. Yeah, you know what? I don't have a plan in place for elder care or long-term care. I need something, right? And so there's a tremendous gap here that is an opportunity for us to have this conversation. So the Securian solution, the asset-based long-term care planning approach, you know, I mentioned traditional long-term care and what that is, hybrid. Within hybrid long-term care solutions, there's asset-based long-term care solution, and asset-based really is it's a repositioning, taking our current assets, our portfolio, and repositioning that portfolio and assets to better position our clients and consumers for this long-term care risk, right? So let's take a scenario here. Let's say we have a 55-year-old female. She's worked for state government her whole life. She's got a great pension through the state. She's got money set aside in qualified retirement sources like an IRA, and she's saved. She was great, you know, at saving. She's got $500,000 in the bank. Okay, so that $500,000 in the bank, in addition to her pension and qualified retirement assets, is going to create income for her of $80,000 in retirement. So she's planning on this $80,000 income in retirement. Her living expenses are about $60,000, right? What we know about long-term care is it costs, but really what it creates is a income need. You need additional income as you age to meet these long-term care expenses. She lives a full life. She has this $80,000 of income now. You know, her family's helping her as she ages, and now she's at a position where she needs to hire someone to come to the house 3-4 days a week for a good amount of the day, and that's going to cost $75,000. She needs to pay out this additional income. Now, with her planned income of $80,000, her living expenses are the same. We often see that living expenses actually increase as there's a care need, right? So she has $60,000 now. She has to pay an additional $75,000 for long-term care expenses. Well, where's that money going to come from, right? Most often it comes from savings, right? That $500,000 and the growth she socked away in the bank is where she's going to pull on that additional income. Now that $500,000 she set aside for her kids and her grandkids, right? Not to pay for long-term care. And so why not take a portion of these savings? We have $500,000 in savings. Let's take $100,000, let's say. We'll reposition $100,000 into a plan that creates long-term care. And we'll look at an infographic of exactly how SecureCare would function. So SecureCare is a universal life insurance policy. It's a universal life and long-term care. And in that scenario where we're repositioning $100,000 of our assets, we reposition it into a base universal life policy. That gives us a death benefit should we pass away and not need long-term care, but it also gives us an attached long-term care policy to pay for long-term care should we need it. And in this example actually shows a 60-year-old female, $100,000 repositioned into this policy is going to create a monthly benefit of $6,882 at her age 80. So this solution creates a base universal life policy with an attached long-term care policy and inflation. There's inflation options. So this assumes a 3% compound inflation, which would grow from her age 60 to 80 to about $500,000 or $6,882 a month, which would pay out in this case over 6 years. Now to really look at the opportunity and what it looks like, right? So we're using $100,000 repositioned as a one-time asset, right? But we do have payment options all the way up through 15 years. You can pay over 5 years, 7 years, 10 years, even 15 years. You don't have to add inflation, but most folks use a 3% compound inflation rider. We do have multiple inflation options, 3% compound price as well, and provide substantial growth. So in this case of $100,000 repositioned for a 60-year-old, we have $693,000 by age 85. In this example, we're using age 85 instead of age 80. I think depending on your client and their family history, longevity, you can kind of estimate when they might need care, right? Age 85 is a common age that's used. And so for $100,000 over 25 years with this 3% compound, it grows to almost $700,000 of total long-term care benefit. If you pay it over 15 years, let's say, the leverage is less, but paying $6,667 a year for 15 years with that 3%, it still grows to $500,000. So still significant leverage. And this is really where the power of the solution is. On this right-hand side, hopefully you can see this well, there's a tax equivalent yield in each of these scenarios when you use that 3% compound of either 9.5%, somewhere between 9.5% to 10%, right? And so if we compare this to a taxable investment, right? Maybe we leave this money in the market, we leave it invested, or it's in mutual funds, right? Certainly you can earn up to 9%, even 10% or more in the market. Over the past few years, the market's been growing incredibly well, and so maybe you'd out earn that in the market. But this is a guaranteed solution. The premium is guaranteed. These benefits are guaranteed. That 3% compound growth is guaranteed. So when she goes to file a claim at age 85, this total long-term care benefit pool is a guaranteed number, right? And so yes, you could out earn 9.5% in the market, but not on a guaranteed basis, right? So when we're hedging for this long-term care cost, and we can reposition some of our assets, reposition it into a fixed guaranteed solution that provides fantastic return that can cover this risk well. And now once this risk is covered well, we can maybe reimagine the rest of our investments. She can reimagine, maybe use money for that second home on the lake, right? Or travel more, or invest it a little bit more aggressively, because this biggest risk in retirement, which is medical costs and long-term care costs, has been hedged for. And so that's really the value proposition, right? As a guaranteed solution, it has fantastic return, right? Now, I mentioned this benefit is guaranteed at age 85. And one of the reasons I say that, the total benefit is guaranteed, but one of the unique aspects to Securian is we do offer these benefits payable as indemnity. So most long-term care solutions are reimbursement in nature. And that's how most insurance is, right? If you have auto insurance, you don't get anything from your auto insurance until you get in an accident, right? And your loss is reimbursed. Or homeowners is the same, right? You don't get anything from your homeowner's policy until you have a claim for loss on your home. Most long-term care insurance is the same. You have this stated benefit. When you need care, you submit claims to the insurance policy that show evidence of the cost of that care, and you're reimbursed the cost of your care. SecureCare, on the other hand, is indemnity in nature, which really means it's an income benefit. So if the policy says you get $12,000 a month at this age, that $12,000 a month pays you as income regardless of your cost. It's not dependent on the cost of the care. It is payable as income. And so that allows someone to really receive the full amount of the benefit from the policy as a guaranteed benefit. Now that income is payable regardless of the type of care. And so really does also add flexibility to the solution, whether you're in assisted living, whether it's nursing home, whether it's a caregiver coming to your home, whether they're a licensed caregiver or, you know, an extended family member, maybe it's a niece or a nephew. This still provides benefit all the way up to even a spouse. Even if your spouse is providing a care, as long as you meet that chronic illness definition I highlighted early in the presentation, that someone is diagnosed with a cognitive impairment or can't do those 2 of 6 activities of daily living, if they meet that qualification, they start to receive this income benefit. And so that creates great flexibility and an opportunity to really take advantage of the full benefit the policy provides. And so there are, as I've said throughout the presentation, 4 guarantees of the solution: guaranteed long-term care benefits, guaranteed reduced paid up benefits. So, you know, that last table highlighted payment options all the way up to 15 years. The way our contract is structured, it's structured so that it will not lapse based on non-payment of premium. If someone signs up for a 10-year payment and they pay 5 years and stop paying premium, there is a reduced paid up policy that's pretty much representative of the amount of premium they paid in. It's proportionate. If they pay 5 of 10 years of premium, that's 50%, then they have a reduced benefit that's roughly 50% of their original benefit. And on top of that, they still get the inflation. The inflation will grow on the reduced benefit. The death benefit, every policy has a death benefit that's guaranteed and return of premium. So it is a liquid investment. If we pay it up as a single pay, as an asset reposition, there's a 5-year vesting schedule that after 5 years, we have 100% that we can get back. Now the vesting schedule starts at 80% of our original investment. It increases by 4% every year, so that after 5 years, you get 100% of your investment should you change your mind and decide to cancel it down the road. Other features I hadn't mentioned are our elimination period. So when you file a claim, there is an elimination period. It's 90 calendar days. That once you submit a claim to Securian, 90 calendar days or 3 months from filing that claim, those benefits begin. Now that elimination period is from the beginning of evidence of need. So, you know, let's say you're diagnosed Alzheimer's and your family doesn't know that you have a policy. They discover 4 or 5, 6 months later, right? They say, oh, you've got this SecureCare policy. They file a claim with us. Well, you were diagnosed with Alzheimer's 6 months ago, right? And so that benefit will begin right away because you've already satisfied the 90 days from the diagnosis or the evidence of need. All right, I've mentioned this indemnity versus reimbursement, that these benefits are paid out as indemnity, which really does create flexibility. One other thing I'll highlight as we bring our time to a close here are tax implications. And so there's an additional opportunity as we're helping folks plan with these solutions, right? That the IRS does allow for potential deductibility of long-term care insurance premium. Now, the question often is, because this is a hybrid solution or it's long-term care based on a life insurance chassis, what are the tax implications now, right? Well, this policy structure, we've strategically structured the policy so that we have really 2 separate contracts in one, right? There's a base life insurance or face amount of the policy, and there are long-term care benefits that are in their own contractual agreements. And by separating them out, it allows for potential deductibility of long-term care costs in the policy, not the base life insurance costs, but long-term care insurance costs. And right in our illustration, our SecureCare illustration. When you take a look at it, we have a cover page, and then the second page of the illustration breaks out the premium. It says, out of your $10,000 a year that you're going to pay, $4,000 is life insurance cost, and the other $6,000 is long-term care costs. And so that $6,000, the amount of the long-term care cost, is potentially deductible. Now, what the IRS, the way that they look at long-term care deductibility, they look at it on an individual basis and a business basis, whether a small business, a pass-through like an S corp, or a corporation like a C corp, right? And they put on individuals some limits. What they have is age-based limits on individuals. So there's a limited opportunity for individuals to take advantage of the deduction because of these age-based limits you see on the table here. For example, a 61 to 70-year-old has up to $4,520 that the IRS says they can deduct based on this age-based limit. In addition to that, an individual, to take advantage of the deduction, would have to itemize, and they have to meet 7.5% of their adjusted gross income. If you're familiar with that part of itemizing in the 1040, right? So there's a limited opportunity for individuals, but where there is a substantial opportunity is funding the policy through health savings accounts, HSAs, or even MSAs, medical savings accounts, for individuals that have them. Because the IRS laid out this age-based limit, someone can fund up to this age-based limit from an HSA or from a medical savings account. And they can structure it so that they make a payment to us up to the limit out of their HSA and pay the remainder out of their checking account or wherever the other assets are. For an S corp or a business, there's increased opportunity. A corporation has the most opportunity to take advantage of tax deductibility. For example, there are more and more companies that are using these type of plans to create executive carve-outs or executive benefit plans. And so they put a plan in place. The business buys the plan for key employees. A C corp actually can deduct 100% of the premium on that executive or that individual that they purchase the policy for. So, a business funds a policy for $100,000 as a one-time payment, they can deduct the full $100,000. If a business, funds it at $20,000 a year for 5 years, over those 5 years, every year they can deduct the $20,000. The employee, as the executive, has to claim the amount of life insurance that their employer paid as income and not the long-term care. They can exclude the long-term care. So in many of these arrangements, we'll have a business funded over 5 or 10 years. If they do it over 10 years, the premium might be $10,000 a year, and every year the business deducts that $10,000 a year as an employee benefit. The employee, on the other hand, $6,000 of that, just as a rough example, represents long-term care costs. They can exclude that, but they have to claim additional $4,000 a year in additional income. And so that's how that would play out. So there's tremendous opportunities here as we plan for individuals, but also when looking at small businesses and corporations. So I'm going to pause there. Justin, I know we took the full hour, but if there are any questions that came across that we want to answer quickly, I'd be happy to.
I appreciate that, John. Can you hear me okay?
I sure can.
Excellent. Hey, thank you very much for your time today. I've got a couple quick polling questions, and that I'm going to go ahead and start here. One of the things to know, we're going to be reaching out, my team, and we'll be in contact with John if you have any questions. Work very close together throughout this week, especially today. If you have interest in the long-term care insurance awareness kit, make sure to let myself, Tony, or Jess Riley know. We'll be reaching out to you today. Let's go ahead and start with our first polling question here, and then what we can do, John, is as questions come in on the other side, we can get those answered, and also funnel them through my team here. We can get them over to you as well. But thank you so much about your time here. First polling question, I'm going to go ahead and launch this here. If you have interest in licensing with Securian Life, to take a look at the solution here, great resources, get access to John's expertise as well. Go ahead and select yes. Give about 25 seconds here for that one. as you're answering those, and we'll move on to the next. John, it must be you. People are really answering here, which is great. They normally don't answer a lot to me, but that's okay. I was just used to it here back in high school.
Hey, fantastic. That's good to hear.
I've got a 7 and an 8-year-old, and this weekend was a perfect example of how they don't listen to me, but we'll try. Woe is me, right?
I hear you.
So,
I'm with you. I've got a couple boys around the same age.
gotta love it. Well, so we got that one done here. Next question is, would you like to sign up for our upcoming, or have you already, if you already have, great. Would you like to sign up for our upcoming training academies for both life and annuities? If you have interest in this would be a great way to go ahead and save the time putting it on a list and going to our site and registering, because if you select this, we're going to reach out to you and take care of it over the phone. Get on that waiting list. We do have carrier partners involved, and we're making the selection process now, but we had a lot of people from 2020 going into it that were excited for these training academies to come back. We've done them for years, and we've got a huge list here. So we'd love to have you join on this. We're going to be coming up with more as we go forward, as America continues to straighten and give us more opportunities here. Thank you very much, and we'll go on to our next one here, our final one. And are you currently using any of the IAMS creative marketing solutions? So looking for your feedback. Are you currently using any of those? Maybe some you've partnered with us in the past. This would be a great opportunity as it relates to John and I talking about the benefits of long-term care, and I wholeheartedly believe that's a big part of planning there, John. As an RICP, you can almost assure that long-term care is in there. But if you're not marketing long-term care within your practice, maybe it should be something you should consider, or you have a question, or you used to use marketing services here at IAMS and you haven't. Let us know. And with that being said, we'll close it up here. And John, I wanted to tell you thank you very much for your time. And what we'll do is I'll be getting you the information, and you and I will be in contact. If you have any questions whatsoever, reach out to your primary contact here at IAMS or myself. I'll be available here all throughout the week, and we'll be in contact with you as well. Thank you very much for all attending, and appreciate all that you do. Look forward to speaking with you and assisting with you on some of these opportunities and questions. And I know John is happy to help as well. 800-255-5055 is our number here at IAMS. And funnel those questions on in. And John, we can get them your number here as well, or have them come through our team. We can pass them on up.
Absolutely. Thank you, Justin. It was great to be with you. And if we have another second, I can throw my number on the screen here.
Oh, yeah. Yeah, let's do that. Let me
pop it up. I believe I've got it. Here we are. So this is me and my internal support partner. Yeah, absolutely. I'm happy to address questions via email or call me direct.
Excellent. Thank you so much. That worked out. Yeah, we'll just continue to go forward. I think this is going to be more and more of a need. Appreciate your support as always, and Securians too, John. We'll talk here soon. Thank you everybody for attending. Have a phenomenal week. Talk to you soon.